All right, let's get the Thanksgiving party started here in 2 minutes. We'll wait for some people to file in. Got a lot to look at and a lot to talk about. Looks like we're good to go. Where's everybody watching from this morning? We'll start here in 2 minutes. Austria, Illinois, Arizona, Atlanta, British Columbia, Scotland, Houston, Cleveland, Portugal, North Carolina, Ontario, Houston, UK, Florida, UK, France, Pennsylvania, Netherlands, Toronto, Sarasota, Canada, Buffalo, Texas, Jerusalem, India. We're all over the map. That's really cool. Sweden, Estonia, Siberia, Bulgaria, that's wild, Romania, Australia, Slovenia. That's a lot of places. Thank you all for joining me. All right, well, let's get into it. It's Thanksgiving here in the U.S., and I'm definitely thankful. Let's go through the rundown, what we're going to talk about. I'm going to rant a little bit about some things. Going to go over just a quick recap of how I played this move over the last couple of months, what my short-term game plan is going forward, things that we can look for, technically speaking, from here going forward. I've got a list written down here. And we'll talk about all that, and then I will take some questions and such after that. Okay, so first things first, it's Thanksgiving, things that I am thankful for. Obviously, the opportunity in the crypto space. I love the camaraderie that we have. Crypto Twitter can definitely be a bit of a brutal place, and there's a lot of emotions on crypto Twitter. But in general, most people want to help each other out, and that's an awesome environment to be in. And the support that I have gotten over the last 5 years, a lot of you have been watching for 2 years, 3 years, and that support, I can't put into words how meaningful that has had an impact on my life for a number of reasons. You know, I'm a disciplined person, but I would not have nearly the discipline and drive that I have to be the best trader that I can possibly be if it weren't for all of you. When I first started making videos 5 years ago, if I didn't get any good feedback and if nobody cared, I would have stopped making them. And I shudder to think where I would be if that were the course that my life had taken. Instead, I got good feedback. It was drive and motivation. I kept making them, and that elevated me to be a better and better trader. I'm going to be a lot more respective of my rules and be the utmost, perfection trader that I can possibly be if everybody else is watching and if I'm putting myself out there. Otherwise, I'm being dishonest. So it really propelled me to put in a ton of time and effort and really up my game, and your support had a huge impact in all of that. So I appreciate that very much. And I appreciate the opportunity that cryptocurrency is giving a lot of people. For me, the best thing that I like about cryptocurrency is the potential that it has to break up the stronghold that rich, old generational money has had on society for hundreds of years. And this is really shaking things up and has the potential to continue shaking things up as we see capital shift around in big ways in the space. So I'm definitely bullish crypto longer term, but overall I'm a trader, and that means I'm going to capitalize on short-term opportunity, and that means there's going to be times where I'm not in cryptocurrency, and there's going to be times where I'm bearish cryptocurrency based on what the charts are telling us, and I'm not there at this point. We'll go into that a little bit more in depth, but that's just my mindset as a whole. So let's start off looking at SPY. Again, just checking in on the broader market. No red flags, bulls in complete control, and we're just under the all-time high. So broader markets are extremely healthy still. The dollar still weak, trying to find a base of support, but really just unable to put together any kind of momentum going forward. We know for our assets, whether it's metals, stocks, or crypto, if the dollar is weak, that's a good thing. So the dollar is remaining weak, and that is keeping all those assets strong for the most part. That being said, gold has seen a very notable drop over the last couple of days, and that has started the narrative shift. And unfortunately, this pullback in crypto, or in Bitcoin, I should say, is going to change that narrative a little bit. It would have been awesome if Bitcoin hit all-time highs while gold dumped, because then everybody would be talking about the market share that is going from gold into Bitcoin and essentially taking some of that slice of the pie of that market share. So that would have been awesome, and it's still likely taking place. But right now, gold is seeing weakness, and we are looking for a monthly higher low to form, and we have not found that monthly higher low. So in consolidation mode for the last few months in the metals, and now just daily consolidation in cryptocurrency, and obviously it's not very significant at this point. So big pullback on Bitcoin. We'll look at it in just a minute. Smaller picture for me personally, my trading over the past few months, I was red trading crypto in 2020 until October. And it was a small red because I wasn't paying much attention to crypto. And that's because we had the 2020 insane volatility with the dump and the bounce in stocks. And there was more opportunity than I need in stocks. There's zero fees. And that was just an ideal environment. And I was doing really well trading stocks. And I was not focusing on crypto. And because of that, I had a small red trading result on crypto in 2020. I was trying to build a long-term swing position. And then the flash dump in February, or I guess that was March, stopped me out. And that's what gave me that red on the year. And I was thinking, man, is this going to be the first time ever that I have a red year trading cryptocurrency? And then we had this daily equilibrium. And as this daily equilibrium continued to tighten, and I'm going to talk a little bit about equilibriums on a broader scale in all markets here towards the end of this video because of how important they are and how beautiful their signals often are. And gold had a beautiful one we're going to look at, and so did Bitcoin. And so I was watching this daily equilibrium, and as it was continuing to tighten, there were some negative headlines coming out. And I don't even remember what they were off the top of my head, but I remember thinking, okay, if we are not breaking bearish on negative headlines, and then that positive headline came out, I believe it was Square going into 50 million, putting some cash reserves into Bitcoin. And I said, okay, if we're not going down and breaking bearish on bearish headlines, what is the probability that we're going to break bearish on a positive headline? And the result of that thought was very, very low. So I went real aggressive and entered bullish just before the equilibrium broke, and then it broke and got follow through. So my entry was at about 10,700, and I went very large in that position. And the larger I go in a position, the faster I start scaling out. And that is just to be a bit more protective. So I have been scaling out Bitcoin, this move up. And, I sold some in the 13,000s, and I sold some when we consolidated on the daily here around 15,000. And that was just me continuing to lighten up my position. And eventually I reached a point where I said, okay, I'm comfortable with this amount of Bitcoin, and I'm now going to ride that amount as long as we are in a daily uptrend and as long as the daily 12-period EMA support continues to hold. And obviously, that is no longer the case. So I stopped out last night overnight from all of my position, my swing position. I have my no-touch crypto position, which is no touch, and I stopped out all of my swing trades. And I was in ETH as well. We'll go over what my plan was and is for ETH when we get there. But so now I'm back to all cash on Bitcoin as far as last night is concerned. And last night I said to myself, I'm taking a mental day. I haven't taken a mental day off the computer in months. It's the holiday and I need a break. And then of course crypto starts dumping. And I'm proud of my discipline because I said, nope, I said I'm going to be disciplined and I'm not going online to play this bounce. And otherwise, I'm always going to make an excuse. And mental health, in my opinion, is much more important than this short-term profit opportunity. Those of you that know me back in 2017, a lot of you started watching these videos back then. I would have been, back in 2017, I was living in my small shed, and I would have had my computer next to my head, and I would have been waking up every 2 hours and setting orders and positioning myself and aggressively trading, because my goals in 2017 were maximize this opportunity, give it everything you possibly can give it, because this opportunity is going to be short-lived and it's not going to keep going up forever, and you need to capitalize on it. And it's important to set these goals within yourself as well. Is that how you are approaching the space right now? Right now, my approach is goal number 1, don't give back any profit that I made in 2017. Goal number 2, add to that profit as I am able in good risk to reward scenarios. You might be here in 2020 saying where I was back in 2017, where you are trying to make the absolute most of this opportunity and you're giving it everything you've got. And if that is the case, you and I are going to have different game plans in how we are trading this space. So everybody's setup is different based on what their goals are. So I did not trade this bounce last night. And if you showed this chart in 2017 and said Dan didn't play this bounce, you'd be crazy. So I am just now starting to re-enter some positions. My stop loss on Bitcoin was under 17,600. That was our last daily high or low. And if that level were lost, we would lose the daily EMA 12 support, most likely. And that's what's happened. So I stopped out at 17,600. And I've just started slowly adding back a position here on the hourly high or low. So I just added a position right before going live. And my game plan from here is I will add more on a break of 16,000 if we keep dropping, because that means the 4-hour RSI will be approaching the teens if that were to happen. Otherwise, I will wait for a bounce. I will expect a 4-hour lower high, and then I will make another entry on a 4-hour high or low and be playing off of the bottom at that point. I'm not going aggressive right now for the reasons that I just stated, and also the fact that I'm not convinced that this is our bottom just yet. I think it is. I think we're going to form an hourly high or low compared to 16,000 and head back to the top of this bounce of 17,434. But I'm being a little bit cautious and a little bit patient as I look to re-enter positions cheaper than where I sold them. As long as it's cheaper, that's just fine. And a note on that, you know, logically, we think about things and say, we want to see re-entries cheaper than where we sell. The goal is to sell high and rebuy lower and sell higher. That being said, it's very important to develop the mindset as a trader where you are just fine rebuying things higher. Because if you are not, that is the kind of opportunity, that is the kind of mindset that makes you miss significant opportunities. So if I sell Bitcoin at 17,600 and we then get a clear, a 4-hour equilibrium, and that would require me rebuying at 17,900, I will happily do so as long as I've got a clear stop level nearby. And if I weren't happily able to do that, again, there's going to be many times where it just runs away from me, and the fact that I wouldn't rebuy higher is going to make me miss those opportunities. So I'll talk a bit about that more in a different video, because that's a whole video in itself. But there are many times where I will exit a trade and then re-enter it a little bit higher, because then I have a clear stop level nearby to be going off of. If something's running straight up and there's no stops nearby, I need to protect that profit. And then if I stop out, we get a clear stop, support level to be playing off of, then I am much more comfortable, even if it requires rebuying higher, to have that nearby support to play off of. So through the course of this live stream, we're either going to lose this hourly support, or we're going to see an hourly tightening range continue to play out, and we'll continually check back in here on Bitcoin in the short term. Again, if 16,200 breaks, this 4-hour RSI is going to be absolutely crushed, and I will be scaling in for some more into the face of weakness, essentially. Could this be the start of weekly consolidation? That's entirely possible. That's a bearish reversal candle on the weekly time frame. That being said, it's still a pattern of a higher low every single week. So once this bounce gets going, and once the bulls can confirm a 4-hour trend change, we are then going to be watching for a daily lower high compared to the top 19,500. And if we confirm a downtrend, then we say weekly consolidation is underway. So that's what we're going to be watching for. But again, it's the zoom out game, one time frame at a time. We are watching the hourly. Can we change the hourly trend? If we do, we zoom out. We watch for a 4-hour lower high. Then the question is, can we change the 4-hour trend? If we do, we zoom out and we look for a daily lower high. So one time frame at a time, and that's going to take place over the next few days as we see this bounce try and sort itself out. Another factor with the changing market environment, clearly the market environment has now changed. So since that equilibrium bull break on the daily time frame, this is one market environment where certain indicators are used very well and consistently. And as soon as this happens, we now know we are in a new market environment. So during this first big circle, as I'm drawing a giraffe, it looks like, during this first big circle, we had opportunities where you just buy oversold. Buy 5-minute oversold if we're coming off a fresh high. Buy hourly oversold if we're looking for a daily high or low. And consistently, time and time again, it plays out. And traders get very comfortable doing that. And traders get lulled into a sense of complacency. I was talking to a friend last night as the pullback started, and they were looking at the 4-hour chart and they said, but ETH, that's going to be low 500s if we hit 4-hour oversold. And my answer was, yeah, but you've been trading, you've been watching this crypto space for 3 years. You know that we run up really hard and then we dump really hard. And it's people getting in a sense of complacency. This is essentially the exact opposite of a short squeeze. If you inverted this chart, it would just be an all-out collapse. And it's, again, the scales, supply and demand. Over the past 2 months, demand for Bitcoin has significantly outweighed supply on a daily basis, essentially, just all the time. And then the higher we get and the closer we get to that all-time high, it starts to level out a little bit where some bulls are taking some profit just under the all-time high. That increases the supply. And some bears are getting confident to top fish the all-time high and entering short positions, and that increases the supply as well. And then the demand dries up a little bit. You know, I got my first Facebook message from a hippie yesterday about getting into crypto, a hippie friend. And those are all little clues about potential short-term tops being set, because we reach a point where, okay, who's left to buy in the short term? And that's essentially what happened. And then the supply outweighs the demand and the scales flip, and they flip really fast in this scenario. So I am no longer treating 5-minute and hourly oversold conditions anywhere near the same in this market environment, this current one, compared to the last one. They are very different. 5-minute and hourly oversold do not mean the same thing. Even the 4-hour oversold RSI, we would have expected a more significant V-shaped bounce from that first 4-hour oversold conditions, and we have not gotten that at this point. It could be taking its sweet time to play out, and it may play out, but it's a different market environment. And bears are going to have a little bit more confidence now. Bears are watching for the 4-hour lower high. So just be aware that signals are a little bit different. So how are we going to trade this current market environment? You know, we had a very easy signal, oversold RSI, and now we don't have that very easy signal. For me, it's price levels, which is why I'm entering here, looking for the hourly high or low and the attempted hourly trend change. So it's back to price levels as the most important factor. RSI had a lot of importance last time in the previous market cycle, and in the current market cycle, it's price levels, and it's whether or not the bulls are able to regain shorter-term trends in their favor. So one step at a time, hourly trend change needed, and then we look for the 4-hour lower high. And you can also be looking to hedge. Say you have a long-term position that you haven't exited on Bitcoin. Maybe you make a little bit of a short entry on a 4-hour lower high. So bears with a short-term win, stop losses being triggered. Again, you look at this chart. When's the last time anybody using daily levels has been stopped out of a position? It hasn't happened in a couple months. And that changed yesterday, and that added to the magnitude of that waterfall flush. And my stop loss was part of that. My stop loss triggered, and it didn't care what short-term RSI was when my stop loss triggered. It's going to trigger automatically no matter what. And that added to a bit more of that extreme downside. Bitcoin dominance. So we've been constantly monitoring, is it better to have your money in altcoins or better to have your money in Bitcoin? And it shifted considerably over the last couple of weeks, where for the longest time, Bitcoin just was the place to be if you wanted gains. If you wanted more gains, I should say. You're making gains in altcoins, there's more gains in Bitcoin. That changed very significantly on this massive dump. And now, on this bounce, we're looking for a daily lower high. And that's going to be a time to focus on altcoins over Bitcoin again, in my opinion. And the current pullback that we're seeing right now is showing us that on this bounce, altcoins are bouncing faster. Altcoins are bouncing more significantly as dominance drops. But the fact that we were going up on this dominance chart during the dump shows us that altcoins were dropping faster. So essentially, altcoins are just doing the extremes in both directions. They're a more volatile version of Bitcoin, essentially, where they're dropping harder on the drops and they're bouncing harder on the bounces. If I want more risk and reward in the crypto space, I'm trading altcoins. If I want less, because Bitcoin has all the volatility that I need, then I'm focused on Bitcoin and I don't need to expose myself to the bigger percentage swings in both directions. So again, you have to ask yourself, that's a personal question. What are you looking for? What is your goal in this space? And that's going to determine where your focus is. So I'm watching the 4-hour uptrend on this dominance chart, And when that 4-hour uptrend is lost, we will then say our daily lower high is set, and it'll be then time to be watching those altcoins a bit more closely. For me personally, I'm interested in Bitcoin and ETH both in this current scenario. I'm going to rebuild my ETH position. I've already started rebuilding that Bitcoin position a little bit. Let's go to ETH. So ETH had a monster run up, and I made an entry on Bitcoin or on ETH a little bit later, and it was on November 7th. And I made a video November 5th talking about my game plan. I believe that's on Twitter. And it was just essentially waiting for the next pullback on Bitcoin and where Bitcoin is next going to trade sideways. I think I was looking for a week of sideways trading for the altcoins to start getting some love. Because at that point in time, the altcoins, Bitcoin pairings were at rock bottom. They were getting crushed. And on that pullback, Bitcoin did then trade sideways for 5 days. We had our high and low, and then we traded sideways 1, 2, 3, 4 more days. So we got, half to most of a week, and then the bull break on Bitcoin. But during that point in time, that is when I made my entry into ETH, as I was expecting the altcoin bulls to start to gain some ground. And obviously that paid off big time on this move up. The difference between how I traded ETH and Bitcoin, I was scaling out ETH into strength. And that's because I was more aggressive profit taking on ETH, and I had already taken all the profit that I needed to on Bitcoin, and I was happy with that position size, like I said. So I sold some ETH in the 560s. I sold some in the 590s. I set a stop loss under 587 on this hourly time frame when it started tightening up. I stopped out more there. And then last night, at that point, I only had about 20% of my position left, and I stopped out of the rest of it. So selling into strength as opposed to getting stopped out. And that was just recognizing, again, things getting a bit overextended. We had rising wedges start to form on a lot of names. And ETH gave us a rising wedge on the hourly time frame, and it broke bearish. And then we back tested and rejected from it, tightened up, and then rolled over. Look at Bitcoin on the 4-hour time frame. We had been watching this one as well, but long story short, it's a rising wedge, and it led to a very clear break and drop. So we were tightening up within it, we double topped, and then we just fell out of this rising wedge. Litecoin was a 4-hour rising wedge. So rising wedges show us bulls tiring. And then the bears obviously take over. So this was a rising wedge, and I'm being a little bit sloppy with my lines here, just drawing them quickly, but it was just like ETH, where it had a bear break, a lack of follow through, a back test and a rejection, and then it absolutely dumped. And ETH on the hourly time frame had that same back test and rejection before eventually rolling over. So rising wedges were showing us bulls are losing a little bit of momentum. We know we're extremely overextended. We know at any point some further consolidation is going to be needed. So at this point in time on Bitcoin, we're watching for wide ranges to be established, and we're watching for equilibriums to form. We know when we see a huge move up and a huge move down that the most likely scenario is then a tightening range for a long time. So I anticipate the volatility in the cryptocurrency space from now into the end of the year is going to, well, that might be a long time. Let's say the next 2 weeks, it's going to shrink. Once we're confident our bottom is set, let's just say that we're confident ETH's bottom is set. Disclaimer, I am not confident in that at the moment. But if we were, we're watching that high, low. We're going to look for a bounce to a lower high. We're then going to look for a higher low. And we're looking to tighten up between this very significant range that was created. And again, that goes back to the equilibriums being the most common pattern in any asset, any commodity that you are looking at in terms of technical analysis. And depending on whatever time frame, you'll find them. Gold just gave us a 2-year monthly equilibrium. Let's go back to it. This is a monthly equilibrium that we were watching for years. And it was enough for us to say, I made a video for this saying, I don't know when it's going to break, but when it breaks, get ready for a lot of volatility in gold miners and in the metals. And we eventually broke this bullish, just tightening up, bull break, and tons of follow through. The longer the time frame that the equilibrium is taking place, the longer the move is going to play out on the bull break. So this 2-year monthly equilibrium got a break that lasted essentially a year. The Bitcoin daily chart had a multiple month equilibrium that formed, and then it played out for weeks or a couple months at this point. So now we're watching for a daily equilibrium to form. And it's a wider range percentage-wise on these altcoins than it is on Bitcoin. So if we can change the 4-hour trend from here, which again, we're not close to doing, but if we change the hourly trend, get enough bounce to then look for the 4-hour lower high and then change the 4-hour trend, then we'll say, all right, our daily higher low, not a higher low, our daily, well, actually it is still a higher low. Our daily higher low is set, and now we look for that daily lower high and equilibrium. So again, if you're an aggressive bull, you're looking for these entries for the daily support to be found. If you're a patient bear, you're waiting for these daily lower highs, whether it's to hedge or to go short. And that is the most likely scenario from where we currently stand. The only thing missing is the confidence that our bottom is set. And we're going to hopefully gain that confidence over the next 12 hours or so as this range continues to develop a bit. So my plan on entering ETH, I'll probably enter a position after this live stream. And again, it's just looking for that hourly high or low, same thing, just slowly nibbling back. If I just sold 100% of ETH like I did, and I want to re-enter 20% to just slowly nibble back, have a little bit of exposure, keep a ton of cash in case we do drop to lower lows, but start to reload cheaper essentially with this pullback, and that's going to be my game plan. So I will re-add 20% of ETH once this live stream's done on this pullback. And again, daily equilibrium is what we're going to be watching for. ETH, BTC, same pullback. So I've talked a little bit in the recent videos about the altcoins US dollar chart and the Bitcoin pairing chart and the correlations between the two. Those correlations are very important to be paying attention to. And in 2020, it's now standing out to me more and more how great a guide that is. You can see a coin US dollar pairing going up, Bitcoin's going up way faster, and that altcoin Bitcoin pairing is dropping. The ideal scenario for a bull is a bull move on the US dollar pairing, and it is directly correlating tick for tick with the bull move on its Bitcoin pairing as well. Opposite of that is the ideal bearish scenario is the correlation being the exact same. So if I'm looking at this ETH BTC hourly chart, and I'm looking at the ETH USD hourly chart, I am saying, okay, we're pulling back. We're looking for the hourly high or low. And I'm saying, okay, the bulls are standing out a bit stronger here on ETH BTC. So that is showing me an environment where overnight we were tick for tick, bearish, best case scenario with both ETH USD and ETH BTC dropping in the same manner. That is now shifting a little bit, and it's a little bit more muddled. And if we now want to go back to the best case for the bulls, we need to see the hourly trend change on the US dollar pairing, and we need to see the Bitcoin pairing do the exact same thing. Change its hourly trend, see the 4-hour bounce take place, and that's how we know that the bounce in ETH is the better place to be than in Bitcoin. So keep an eye on the correlations, and you can overlay those charts in Coinbase. I'm being distracted by 10 turkeys literally surrounding me right now, fitting for Thanksgiving Day. But overlay those charts and watch those correlations. And if we see them lining up for the bulls, maybe you go more aggressive as a bull. And if they're a bit muddled and they're not as clear, maybe you use a bit of a smaller position because it's less clear. But constantly monitor the Bitcoin pairing of these altcoins and the Bitcoin dominance chart to determine whether the best place to be is in Bitcoin or in these altcoins. The best trading environment in the crypto space is when you're seeing coins do things individually, which is the environment that we just came from. You had XRP explode, then you had XLM explode, and YFI exploded first, long before everybody else, and then cooled off. So if you look back in hindsight, obviously hindsight's easiest, but if you play that bull move in YFI and you take that profit and you put that profit into XRP, that's how you compound gains and, you know, try and change your life essentially with the amount of gains that you can see in a short-term period of time, which is the environment in 2017. I was going all in on Bitcoin, I was exiting and going all in on ETH, and then all in on Litecoin, and as long as they're doing it individually, that's when you have that opportunity. When everybody's doing it at the same time, you have to choose one and that's it. But when you have a 30% move here and a 30% move there, it's a very different market environment. And again, we are just now shifting away from that environment. This today and from last night is a new market environment in the short term from what it was over the last few weeks. We cannot trade this environment the exact same way as the last few weeks or we're going to give back profit. LTC USD, so the 4-hour rising wedge, backtest rejection and all-out dump, weekly time frame consolidation, but not seeing a weekly higher low attempting to be set yet. And essentially, if we're going to see weekly consolidation on any of these crypto coins, we're going to have to find our temporary bottom, and we're going to have to set a daily lower high and lower low to confirm, yes, weekly consolidation is indeed underway at this point. Litecoin just hit a fresh low. So Litecoin is clearly weaker, and I don't even have to look at LTC, BTC. I know it is very weak. So we're heading back down towards the low there. And LTC USD, at this point, the bulls are hoping it's a falling wedge. And that's when you get bear breaks with a lack of follow through. We just looked at the rising wedges. So I look for wedges as soon as I see breaks with a lack of follow through, whatever direction it is. And I've used wedges in my stock trading, my stock day trading, more in 2020 than any of the last 10 years of trading. And it has been an awesome addition that has gone very well for recognizing different setups that otherwise I may have missed. So on this setup, trying to find my resistance line where I like it here, but there it is. So we're watching this pattern, and we'll see if the bulls can continue to close candles inside of it. And we could stay in this downtrending pattern certainly for a few more hours. But these bear breaks, 71.30, we held support by 20 cents. We're now breaking support, but only by $1 at this point. So let's see if these lower lows continue to see a lack of follow through, which shows the exact opposite. It shows bear exhaustion. So we know the rising wedges showed bull exhaustion. This is showing us bear exhaustion as long as we stay in it. It's entirely possible to break rising wedges bullish, even though it's a bearish pattern, and to break falling wedges bearish, even though it's a bullish pattern. We just know probabilities. So the probability this breaks bullish instead of bearish is higher. LTC, BTC heading down to test the low, daily time frame pulling back. And again, because we are seeing the US dollar and the Bitcoin pairings pulling back on the daily time frame at the same time, we know this move to the downside is magnified and there's a greater percentage drop going on in the altcoin space. XRP USD has been a wild ride. This was an awesome one for bears. This is as clear cut as it gets. You know, Bitcoin, we had that 4-hour rising wedge, we had that double top, we had some red flags. But, and we'll look at those red flags in just a second in hindsight, but this equilibrium, and even in a recent video, either the last video or 2 videos ago, I talked about playing the space bearish and how it's much easier to play this space bearish when you have a resistance level to go off of. You don't want to be scaling into strength to be going bearish because people tried that on XRP and they got blown up trying to short it. As soon as you set that temporary top and you pull back that much, you can anticipate a 4-hour lower high as the most likely scenario. So the video that I'm talking about was right about here, and I was saying bears are watching for this 4-hour lower high because you can have confidence then. You have a clear resistance level to go off of. If I'm right, then we're going to pull back with a 4-hour lower high. If I'm wrong, then we're going to break 78 cents and I'm going to stop out with an acceptable loss. Aggressive bears top fished that resistance. Patient bears just waited for this equilibrium, and the equilibrium broke bearish at 613. So again, recognize the market environment changing for the first time in a long time. XRP on this entire bull move consistently bounced off of the 4-hour EMA 12 support. And I was even able to anticipate, right here I said, if we set that lower high, we're just going to look for a higher low off EMA 12 support again. And it happened. And then as soon as this setup gets tight, you say, well, if we break this 4-hour equilibrium bearish, we're going to lose this EMA 12 support for the first time on this entire massive, multiple 100% bull move. That's going to be a different market environment. And that's exactly what happened. The bear break was at 6-1, and we saw very significant follow through. Aggressive bears had plenty of top fishing levels for the lower highs. Patient bears played that break and saw significant movement to the downside from there. Daily chart. Same thing as ETH. Huge move up, huge pullback. We're going to set a bottom in the near term, in my opinion. And then we're going to look for a daily lower high. And we're going to tighten up between this very broad range. Same thing as Bitcoin. We need an hourly trend change first things first. If we get it, we zoom out. We look for the 4-hour lower high. And then if we get the 4-hour trend change, we zoom out and we look for the daily lower high. One time frame at a time. And right now the bulls have yet to prove anything to us on these hourly charts. XRP BTC, look at how correlated it was. It's the exact same 4-hour equilibrium, the exact same EMA 12 support, and we lost it at the exact same time. We're going to look for a daily higher low here. That daily higher low in these altcoins, ETH as well, it's likely going to align with the Bitcoin dominance chart setting a daily lower high. There's a lot of space where that daily lower high can form, but I would anticipate these daily lower highs form when these altcoins form their daily higher lows. YFI USDT was a bit different because, again, it made this bull move first, and it was one of the first names to attract attention in the crypto space for its speed of significant gains. And then it topped out, and during this last 7-day period, profits were going around to other coins. The biggest factor on YFI USDT is during the entire move, we kept looking at this weekly chart saying we know a weekly lower high is the most likely scenario. Yes, the bulls have full control. Keep in the back of your mind the most likely bigger picture scenario, because if you're stuck on this daily chart, you completely lose sight of the fact that we just bounced hundreds of percent and the all-time high is still hundreds of percent away. A weekly lower high is most likely. So now we have yet to find a daily higher low, and it's been nice that there's been no fake outs here, because to find our daily higher low, we need a 4-hour trend change back to the bulls. And on this entire pullback, we never once confirmed a 4-hour trend change back to the bulls. So the bears have had control of this 4-hour chart ever since the top was hit, and we're still watching for that 4-hour trend change. And I'd be viewing this, our last daily higher low is 14,900. So we'll call that a base of support. There's our high. We're looking for the higher low. Then we're going to look for the lower high and a tightening longer term range. And again, once these bottoms are set, we're looking for volatility in the crypto space on daily timeframes to tighten for at least a week. This is a significant bounce on YFI USDT. Let's see if it can act as a little bit of an early indication to try and change that hourly trend first before some of our other coins. But bigger picture, 4-hour trend change, still would call it a daily high or low. Every single day on this pullback has been a lower high. We tried to change it right there, but then rolled over. These are some member requests. I'm going to go through these real quick. One other point that I forgot to mention was the signal on Gbtc. Now this, you could take this a number of ways. It's a chicken and egg scenario. Did the Gbtc sell-off tell us that we were about to pull back in crypto? So Gbtc sell-off is traders and investors take some risk knowing their hands are tied for 3.5 of the next 4 days with the holiday. Is this a precursor to the temporary top in Bitcoin? So I posted this yesterday when Bitcoin was still in a 4-hour tightening range. And if we look at Gbtc, it was a very notable high volume dump, 7% drop in 30 minutes heading into the end of the day, and Bitcoin was not dropping anywhere near there, and it was the most bear volume in a concerted half-hour time frame that we had seen in the last week plus. So what do I mean by a chicken and egg scenario? Did Gbtc tell us, having already started its daily consolidation yesterday? Because Bitcoin now looks like Gbtc on that daily chart, and yesterday Gbtc printed this candle and Bitcoin didn't look anything like it. So did that indicate that we were going to pull back? You can look at it either way. You could say, yeah, they knew and they wanted to exit their positions. Or you could just say, well, Bitcoin just double topped and we've been running really hard and they know they're going to have their hands tied. So the Bitcoin double top led to the sell-off in Gbtc. Or did the GBT sell-off lead to last night's sell-off in Bitcoin? Either way, I think it all is little pieces of the puzzle that all add on top of each other. Very overextended, just under all-time highs, 4-hour rising wedge, double top at 19,500, long holiday weekend, profit taking. Not surprising whatsoever, but definitely pay attention. There are definitely clues that we can get from Gbtc. One other point I wanted to make before we get into some of these other altcoins was on my ETH position. As I was scaling out into strength, you better believe that my mindset I had a little voice. I had the emotional voice in my mind saying, are you making a mistake? Are you exiting too early? Are you leaving profit on the table? When I stopped out on this 587 break, I exited a third, 25% of my position, and I woke up and we were back at 600. And I'm thinking, okay, Is this just going to be another little daily bull flag? Did I make a mistake? And my point is, you're going to feel FOMO. You're going to have these emotions in your head no matter what, no matter how much experience you have. I've got 10 years and I don't even want to know how many thousands of hours into this, and I still have that voice. The difference is when you gain the experience, you recognize that voice and you tell it to shut up and you don't act on it. So that little voice was talking to me, but my actions were not letting that little voice influence what my decisions were. So if you're still feeling FOMO, again, that's completely normal. Don't think that it disappears after a certain amount of time. You feel it, you just know to ignore it because you've felt it and heard it a million times. You've watched it be wrong a million times, and it's then logic that has to take over, overriding that emotion. What other points did I want to make? So one more point I wanted to make. Our past 2 videos in crypto, short-term red flags from 2 days ago, and then yesterday, bulls keep control. So the short-term red flags that I was talking about in that video, none of them really played out. I was watching the dollar double bottom at 92.13, and we had this green bullish candle. No follow through for the dollar bulls. That was not a factor in the dump that we're seeing right now on Bitcoin. The second thing was a little bit of a sell-off in the tech sector that day. Again, didn't follow through in any way. So there were some initial red flags that I was seeing. Being as overextended as we were magnifying those red flags. But in the end, they were not the reason that we pulled back. It was just good old-fashioned scales tilting. Demand slowly being outweighed by supply for the first time in 6 weeks plus, and a bunch of stop losses triggering at the same time. And I'm curious, what was the RSI at when my stop loss triggered? Because if I was sitting here, yeah, the hourly RSI would have been in the teens. I wouldn't have sold. You know, if I were manually in charge, I would not have sold my position there. But the RSI levels are getting extreme because it's not manual decisions. It is stop losses being triggered regardless of what RSI levels are at. If the price is hit and your stop is there, it's getting triggered. Bulls are working on an hourly higher low to try and form. Bitcoin needs a 5-minute trend change back to the bulls to have confidence in that hourly higher low. And I might have missed my ETH opportunity. Talking to you, fools. I'm going to remain patient and look for the 5-minute higher low here. So that's my game plan. Going to enter a 5-minute higher low on ETH and see if we can get that trend change, working on the hourly trend change. CELUSD. So big pullback on the daily. It looks a lot like ETH. 166 is a key daily support level that's still being maintained. And again, the bulls are working on the bounce. And we know what the Bitcoin bounce looks like at this point in time. So as we're looking at altcoins, we can compare them very easily. This hourly chart is very gross. It shows me a lack of liquidity. I see, oh, that's so brutal. Maybe I'm on the wrong exchange here. Is this the only exchange we're on? Maybe. Either way, this is way too illiquid for me to have any interest in it. We just traded in an hour less than $2,000. So technical analysis is much less useful, but I can see it is doing the same thing as Bitcoin. Hourly 12-period EMA resistance test, and we need a 4-hour trend change back to the bulls for our daily higher low to be set, and we're then going to look for a daily lower high to be the result of that bounce. AAVE USDT, little bit of a daily downtrend confirmed. It looks a little bit more like YFI. Looks like we just disconnected real quick. I believe we're back. You show me that wide a range, and I'm telling you, unequilibrium is extremely likely. Hourly, working on the trend change. Bulls have to break 17.4 to confirm the hourly trend change. From there, we zoom out. We look for the 4-hour lower high, and we have to change the 4-hour trend to be looking for the daily higher low. You can also gauge your aggressiveness as a trader based on what time frame you're using. The most aggressive trader right now, nice Bitcoin volume. The most aggressive trader right now is entering hourly higher lows. A more patient trader is going to wait for the 4-hour bounce to be significant enough for them to say, okay, you proved it, bulls. I'm interested in that higher low. There's a lot of space to work with, and I anticipate a 4-hour higher low is the most likely scenario. A more patient bull is waiting for that. The most patient bull is maybe going to wait for a daily move to shape up to favor the bulls again. So again, that's a question you answer within yourself. How aggressive are you trying to be? Aggressive is using the shorter term time frames. Conservative is waiting for longer term time frames. Theta USDT. So this definitely looks like it's doing its own thing. We got our weekly top, weekly EMA 12. We're just grinding it. And that's the most important range, the high and the low of this pullback. And if we were to drop down and break 55, it's a red flag that monthly consolidation is now underway, because that would confirm a weekly downtrend. As far as the daily chart is concerned, just made a bull break from a tightening range, and obviously the wrong time. And you'll find that often happens, and with stocks, it happens a lot where an individual name will have a clear setup that just breaks bullish, but then the broader market will pull back and ruin that setup. And that's why correlations are so important. If I'm only watching Theta USDT and I'm not watching the cryptocurrency space, I just got faked out in a big way and I have no idea why. Technical analysis is a scam, it doesn't work. But if I know what Bitcoin did, it obviously makes a lot of sense. It was a bull break just at the wrong time, right before a sector-wide dump. So 55 is a must-hold support level. And if that breaks, the bulls are going to lose a lot of their momentum. There's a potential bottom fish off that level. And just like Bitcoin, we need the hourly trend change. We can see it's correlated on the shorter term time frames. So this tells me that this coin did not have a Bitcoin correlation over the last 4 to 5 weeks. But as soon as the volatility in the space picks up last night, now that correlation is picking up more significantly than it has in a while. Did Link, XRP, BTC, don't think we looked at that. No, we did. So it's doing the same thing. We need the hourly trend change. And if we get it, that shows us the altcoins, specifically XRP, will be bouncing more significantly percentage-wise than Bitcoin. And that is the current shape of what is happening. Faster drop, faster bounce appears to be shaping up. So that's an impressive bull volume move. We haven't confirmed a 5-minute trend change yet on Bitcoin, but our confidence is growing that an hourly higher low is being set, and resistance is 17,400. Let's look at that Litecoin falling wedge. Boom, right in it. So sticking in there, that is a falling wedge on the 15-minute time frame to be watching for the next few hours. I might even play that. I haven't traded Litecoin in 2020, I don't think. And if this keeps tightening up, I want one more rejection. When I'm watching patterns, whether it's an equilibrium or a rising wedge, I want them to get as tight as possible. The reason being, it's like just shaking up a soda can, because you get to a certain point where when the move takes place, all the bulls see it and act on it, and all the bears cover their short-term shorts, and that just magnifies the move to the upside. And the tighter you are, the faster you can clear a lot of those short-term resistance levels. So what I would want to see here to have interest, I want one more rejection from this resistance, and then I'm going to look for a play on that next pullback from here, on the next 15-minute high or low. So we'll see how that develops in the short term. OXT, USD. Nope, OX, that's a C. So daily time frame looking a lot like ETH and XRP. We're looking for a daily high or low. Look at the volume here. That's a good sign for the bulls. Big bull volume on the way up, lack of bull volume on the way down. I'm very surprised that the price has pulled back this much on that much volume. That shows me it's not very thinly traded, or actually it is thinly traded. And it also shows me that there's likely people either turning off their bots or shifting how they're calibrated because there's a lack of bid support here. If there was bid support, this volume would not drop the price this significantly. So, you know, if I have a bot trading XYZ altcoin, let's just say OXT altcoin, and I see Bitcoin's doing something, I change the parameters of that bot, and so it pulls the bid support, even if there's not a ton of bear volume, taking out those bids. So 4-hour time frame, still weak. Hourly, trying to change the trend just like Bitcoin. It's a little bit weaker. It's not as developed on this hourly high or low attempting to take place, but it's likely going to follow as it is definitely correlated. So looking for this ETH 5-minute high or low. If I want to be an aggressive bull, I'm looking at a 510 entry. If I want to be a little bit more patient, I'm looking at a 506 entry. And then again, I have a lot of things that I can do with it. How protective do I want to be? If I make that 5-minute high or low entry, my thesis for that trade is our hourly high or low is being set. If I want to be real protective of that trade, I'm using 495 as my stop. Because if 495 breaks, I am wrong. My thesis is wrong. That is not our hourly high or low. Another way to do it would be to use the 480 stop level. And another way to do it would just be to accept that we may see another leg down. And if I have a lot of cash, that may be okay because I would keep adding into the significant weakness. There's so many different ways to approach a trade. And the number one most important question, in my opinion, is, are you aggressive or are you conservative? Number one. And then what time frame is most important to you? A little bit of a flash market sell there on ETH. That seems a bit extreme for 240 coins. All right, let's look at the YouTube chat. You guys have been chatting away. Link. We haven't looked at Link yet, have we? So Link, same hourly setup, trying to change the trend. Bulls have to get over 1285 to confirm the hourly trend change. Zoom out game. We then look for the 4-hour lower high. There's a double bottom there, so that's a difference. A more established base of support. So I'm going to anticipate that the Bitcoin pairing has already started its bounce a bit more significantly. So 4-hour oversold bounce already underway on the Bitcoin pairing, and you're not going to find that on a lot of these altcoins. And that double bottom has a lot to do with it. So base of support down at 1155 and 1151. Need that hourly trend change, and then we zoom out and look for the 4-hour lower high. As far as the daily chart, that's a very notable pullback. Weekly consolidation is already underway. And actually, now we're looking for a weekly equilibrium. We got our high of 20, low of 731, looking like our lower high is set at 1642, and now we're going to look for a higher low compared to 731. And if we were to condense this down on the 2-week time frame, looks a little bit more like an equilibrium forming. Obviously, what Bitcoin does is going to have significant impact on Link, but it has been weaker. If we look at this Bitcoin pairing chart, so what is most notable when I compare the correlations between Link USD to Link BTC? I see a daily uptrend on Link USD, and I see a daily downtrend on Link BTC. That tells me that the Link bulls did not feel any of the love in the altcoin massive pump that took place over the last week. If it did, we would have seen a direct correlation between the US dollar and Bitcoin pairing, and the Bitcoin pairing would have been in a daily uptrend. And that did not happen, and we just hit the lowest price in months on that pairing. So if you're a Link bull, that's fine. You know, fundamentally, long-term, whatever. If you're a trader, being in Link versus any of many altcoins over the last week was the wrong decision in terms of the better place to have your money and the opportunity cost of having money in Link versus any of those other coins. And again, you get that information from comparing the BTC and US dollar pairings to each other. How am I feeling versus MJ versus crypto compared to 2017? That's a good question. So those of you who've been following have known that I've been telling crypto traders to get into MJ, and I've been telling MJ traders to get into crypto because they are very complementary sectors with tons of opportunity in both of them. And the difference this time around is in 2017, you had a perfect timeline where crypto exploded, topped out, and then MJ exploded a couple months after. So I took those crypto profits into MJ for massive gains to be compounded. The difference this time around is the move was happening at the same time. And that's comparable to what I just talked about earlier, where the altcoins are running one at a time as opposed to running all together. When they're running one at a time, you have the opportunity to compound gains. And the sectors did that in 2017. This time around, they happened at the same time. The MJ sector going up while the cryptocurrency space is going up. So if I have to choose where's my money going to sit, one or the other, then it's one or the other. And I have money in both. I have crypto allocated funds and stock allocated funds. So I've definitely been enjoying both sectors in 2019. But that is the biggest difference, the timing of how it is playing out. And it just means a little bit less opportunity to compound gains, essentially, is what it boils down to. But as far as my feelings on the sectors, both, you know, whenever I have a friend who gives birth or someone who has a birthday or whatever, I'm gifting either USMJ stocks or cryptocurrency. And notably, cryptocurrency or USMJ stocks is easier to do that in. Why? Because I tell them to make a broker, and it's very easy to show someone how to buy shares. If I'm doing the crypto space, it's harder. Hard wallets and the technology, and you got to do these things, and you got to use this exchange, as opposed to someone just using their stock account that they already have. So again, that'll continue to change as the space develops, but it is still a little bit of a hurdle in terms of, you know, all these people who are not on the, everybody watching this video obviously does not fall into this category, but we're talking mainstream, and they need a lot of hand holding, and that is definitely a factor in the space at this point in time. Use TA instead of news? Absolutely. And don't have emotions. Like, I'm bullish crypto. I want Bitcoin to go to 100,000. But if things are showing weakness, I'm going to say things are showing weakness because I know that we can easily drop 30 to 50% at the drop of a hat in this space. And if I just have this mindset that we're going to keep going up and we're never going to pull back, then obviously it's not going to work out well for me. Where can you trade stocks with zero fees? Unfortunately, it's pretty much just the US at this point, but it's most brokers in the US. And that was a game changer. If I told you right now the dollar amount of fees that I have given to exchanges in crypto, you would throw up with me. And it's zero in stocks. It is a huge factor in my trading decisions. It adds up big time for a day trader. I mean, just yesterday, if I traded crypto yesterday, how I traded stocks yesterday, I would have had 5 figures in fees. And instead I had 0 because I'm scalp trading large positions and they add up very quickly. And I also really like market orders. When I want in now. And when I want out now. And that's why I choose very liquid instruments to trade. So there's no slippage to do that. And there's no extra fees to do that. It's $0. How does this 19K top compare to 2017? That's a pretty good question. Well, let's look at it. The biggest difference was obviously blue sky breakout, but the size of the pullback, way more concerning. Obviously, we're not done. Again, we could drop another few $100s on Bitcoin here, but this was a drop of 50% before the bottom was hit. So if we drop this current drop, and this is it, it's obviously very mild in comparison, 16% versus 50. And keep in mind that when we confirm a daily downtrend, and like I said, it's entirely possible we change the hourly trend bullish, we change the 4-hour trend bullish, we set our daily lower high and confirm a daily downtrend. That's entirely possible, but all that means is just zoom out and we're looking for a weekly high or low. And the benefit of having all time frames in your favor for whatever trend you're looking at is there's always a higher low somewhere. So let's say we pull back and set a weekly higher low and then confirm a weekly downtrend. My drawing is going out the window. So we set it, we confirm a daily downtrend. We set a weekly higher low off EMA 12 support. We then set a lower high and lower low. We zoom out and we look for a monthly higher low. Anything above 9,800 is a monthly higher low. What will concern me on this double top at the all-time high is losing weekly EMA 12 support. If we lose weekly EMA 12 support from here, red flags are going to be firing for bigger picture over the next 6 months or whatever. But we have a lot of space to go. We can drop another 20% plus from here before we get down towards that level. ETH. So I may not get an entry I like. I might have to shift over to that Litecoin falling wedge. We'll see. When I sell BTC, am I going into USDC, USDT, or into an altcoin? So I always go back to the dollar. For me, my goal in this game is very different than a lot of you fundamental crypto traders. And that's fine. My goal is to accrue US dollars. Until I see the US dollar fall apart, my goal is to accrue US dollars. Because that is what I'm using in my life on a daily basis. And what I'm exchanging for experiences and tangible assets. If your goal is to just acquire as much Bitcoin as possible and that's your retirement plan, that's fine. There is nothing wrong with that. My game plan will very quickly shift on a dime as soon as this dollar starts collapsing. And the most important factor for me right now, this is the 6-month chart on the dollar, and I am watching 88.25 like a hawk. We got our high, we've got our low, we formed a lower high at the top of the virus fiasco, and now we're looking at 88.25. If 88.25 holds, we could trade within this equilibrium. These are 6-month candles. We could trade within this equilibrium for another 2.5, 3 years. And if that happens, I am a very comfortable holder of the dollar. If you confirm this downtrend to break 88.25, then it's a bit of a different story. And then we have essentially a double top and a break of our yearly higher low. That will change things for me. But as long as 88.25 is holding, I absolutely am fine holding US dollars. So again, that is definitely a difference between me and a lot of fundamental crypto traders, and that's just fine. It's all personal goals. Whatever your goals are, they don't have to be the same as mine. All right, looking for any final questions here. Put your crypto on a ledger, do not keep it on a platform. Absolutely. But again, there are different positions. I've got my no-touch position, I've got swing positions, and I've got cash for day trades. And that is the way that I'm approaching the space because, again, it's hard to compartmentalize your mindset. And I do this with stocks as well. I got my day trading account and my swing trading account. Because if my swing trades are in my day trading account, I'm going to be a lot more likely to sell them before my trade game plan plays out. So compartmentalize your brain. This capital is for shorter term. This capital is for longer term. And if you can distinguish those two, it makes it a lot easier. At least that's my experience. And I know it's the experience for a lot of other people. Because otherwise, if I didn't associate long-term no touch with the positions that I have that are long-term no touch, I would have sold them by now. Absolutely. I have a SPY long-term no touch position that I entered on this dump earlier this year, and it's currently up 60%. There is zero chance, knowing myself, that I would be holding through this entire move if I did not at the get-go say this is a no touch position. I would have sold back here easily. And it was because it was in a different account and because I set the rule from the get-go that I am still holding that position. What's a good platform to sign up for stocks? That depends on where you are located. For international, it's mostly Interactive Brokers. In the US, you have a lot more choices, whether it's Fidelity or Thinkorswim, TD Ameritrade. We've got videos. Trading crypto to trading stocks. So I made this video a year ago for people that want to get into the stock market world from the crypto space. It's an hour long. What in the world was I talking about? An hour? check out that video. This live session will be uploaded to the channel. Do I think this is a healthy pullback on this run? I would say at this point, yes. Again, I am not confident our bottom is in. Once the 4-hour bounce starts, I'll have a lot more confidence. So confirming the hourly trend change will go a long way. But again, you look at this weekly chart, we have not even started weekly consolidation. And when we do, we're going to anticipate a weekly high or low. And again, we're talking about different degrees of aggressiveness versus conservative. Someone who missed this run and is more aggressive is entering on this pullback. And someone who is more patient is saying, nope, I'm just waiting for weekly consolidation. I don't care how much it runs up. I need that weekly high or low. And again, it's the difference between having a clear support level nearby to be playing off of versus having nothing. If I'm entering at 18,000 and I'm a longer term trader, where is my stop going on this weekly time frame? We don't have anything nearby. But if I wait for weekly consolidation, we set a higher low, we start to see it bounce, I then have that low as a gauge to be going off of. And we don't have anything on this weekly chart since 10,000. So we need a new weekly level established. Let's see if we can get a cup and handle here. So I don't like this big action on the inside of the cup, but the psychology of a cup and handle would be inability to break resistance, bull flag consolidation, and then a breakout. Because again, you know a lot of shorts have loaded the last 2 days with that top fishing play against resistance. And you know the psychology of the cup and handle where you have the inability to break resistance. Why do you fail to break resistance? It's a long way to get back up in some cases, but it is bulls taking profit under the left side of the cup resistance, and it is bears making bearish entries using that level as a stop. And then you reject. And you form a bull flag in that scenario when there is bulls that missed the move up, making their entries, getting a chance, now that things are cooling off a little bit, and bears that entered on that top fishing play, realizing we're not seeing a ton of follow through and having to cover their positions. So the consolidation on the handle, which is a bull flag, is very brief because you have bulls on the sidelines getting their opportunity, and you have shorts recognizing, okay, I got to win, but not going to be a big win. I'm going to cover this position. And then you take out both resistance levels at the same time, and that's why you see so much breakout follow through, because you got the bulls buying the bull break, you got the bears covering all their short positions, and then you're in blue sky breakout. So that would be ideal as well. Psychologically speaking, a little bit of a weekly bull flag and then a break. What short-term bulls don't want to see is a pullback to that weekly EMA, because if we do drop down towards 14,000, we're then going to watch for a weekly lower high and then a weekly tightening range. So we're already watching for that tightening range on the daily time frame on a lot of these alts. And if the pullback then becomes significant, we got the huge run up. If the pullback is hard and significant, we then watch for the weekly tightening range. But that has not happened at this point, and we would have to drop down towards 14,000 for that to be the case, which means we would need a confirmed daily downtrend. Do I scalp crypto the same style as I scalp stocks? No, I can't because of the fees. It would be suicide, monetary suicide. If crypto were free, I would be, oh man, it would be the Wild West for me. I would be all in on 5-minute higher lows. Look at this 5-minute higher low from the bottom. I would go all in, put my stop under 16,200. Yeah, very different. I have to use longer term time frames. Let's go to our Black Friday plug. So we got our Black Friday deal running through Sunday. and it is for membership, annual membership to the Chart Guys, which is the live streams, which are mostly stock focused, but definitely answer questions about cryptocurrency as well, and we check in on it every day. And promo code is black. You get a hat, you get a free course. There's a live webinar and Q&A for everybody that takes part in this deal for trading strategy, skill sharpening. And I'll post a link in the description of this video once it's up on YouTube, but basically chartguys.com, you'll find it in there. And just the code goes in the annual spot. I'm getting a bit hoarse. It's already been an hour and 20 minutes. Jeez. In the flow. BTC definitely had these kind of pullbacks on the way up in 2019. It's just a reset button. It's just a reset. Flush out any stop losses nearby. Give the bears their win. Give the bulls an opportunity who are on the sideline to make an entry. And the question that's what we're watching right now. How many people were on the sidelines? How many bulls are buying this dip? How many bulls are going to be shaken from their positions and say, oh man, I should have sold on the way up. This is my second chance on this 4-hour bounce. I'm going to sell it in the low 18,000s because I should have sold on the way up. The aggregate of all those questions as to what people are doing with their capital are going to determine whether this is our high or low and we're going to bounce around and make our way back up to that all-time high, or whether we're going to confirm a daily downtrend and start weekly consolidation. How many people are on the sidelines to buy? And we will soon find out. We do have a monthly plan on the chart, guys. It's just an annual sale. So you can do a monthly. If you're already in an annual membership, could you purchase this? Yes. Message Chart Guys Jason in Slack, and essentially we prorate the refund on what you have left on the current annual, and we just start the new annual with the deal from today. All right, one last check-in on Bitcoin. 5-minute time frame. Still no convincing trend change yet on the 5-minute, but that bull volume is very notable and the size of the bull move is very notable. Need some follow through to confirm an hourly high or low is set. And then the question is, can we break 17,434 to confirm the hourly trend change, get over the hourly EMA resistance, start the 4-hour oversold bounce, and then scout a 4-hour lower high as the 4-hour EMA 12 resistance will be dropping around the $18,000 area over the next few candles. And we're actually about to close this candle. So this candle is going to close, and if the hourly trend confirms bullish, this 4-hour inside bar will break bullish and get that bounce underway. So again, I will make a bit of an ETH entry in the low 500s if we pull back here. And because this daily chart is such a significant drop, and because I have a lot of cash to utilize, I'm not going to put a short-term stop loss on it. It'll just be the initial nibbling back of the positions I sold in the upper 500s. On calls, I often talk about day makers, so it's very personal. My day maker right now is 10 times higher than it was before I ever traded cryptocurrency in 2017. And that's obviously because capital gains have increased my position sizes, which increase my goals. So it's very personal. For some people, it is the amount of money that they make at their regular job. And that's their day maker trading to try and match those gains. And percentage-wise, you know, if I have a $100,000 account and my daily goal is $500, then that's going to be 0.5%. If I have a $500,000 account, maybe my goal is still $500. Maybe I have a low bar as I'm learning how to trade, and then my percentage is going to be 0.1%. It's a very big difference. So there's so many factors that go into play. Do I believe in the gap theory? I mean, no. Do most gaps fill? Yes, absolutely. You go back historically, I don't know the percentage, but if I were going to pull it out of the air, it would be 94% of gaps fill. But there are gaps that don't fill. And my example is Netflix. Netflix is trading at $485, and you can find gaps on Netflix daily time frame in the single digits, or double digits, I should say. There is a gap on Netflix at 87.87. Maybe someday it'll fill. But at this point in time, we are hundreds of percent over that level, and it certainly doesn't appear that we're going to fill it anytime soon. So if I use the gap theory and I say, oh, I'm not getting into Netflix on this bull break over 111 because there's a gap at 87, I just missed hundreds of percent. So they are targets that I will look towards. You know, if we're in a daily uptrend and we lose the daily uptrend and start weekly consolidation and there's a gap down there, I'm watching that gap. But at no point am I saying we have to fill that gap. We can't keep running unless we fill that gap. How often do I do these live streams? So I live stream twice a day, Monday, Tuesday, Wednesday. Again, it's mostly stock coverage because it's 9 a.m. Eastern for the stock market open for an hour and a half, and then it's the final 45 minutes before the close. But if crypto's popping off, I definitely will answer any crypto questions as well. I'm Monday, Tuesday, Wednesday, then ChartGal Dinzy does it Thursday, and either Lamont or Jason does it on Friday. All right, I'm done talking. I appreciate you all tuning in. I hope you have a wonderful Thanksgiving day. And if it's not Thanksgiving, that doesn't matter. You can still be grateful for stuff and still be thankful for stuff. I guess that's the same thing. I'm done talking. Have a good rest of your day, and we will certainly see you soon.